Here's a quick overview of the E-mini NASDAQ and ES futures and why you want to potentially trade the one versus the other. First of all, and this accounts for any market if you're new to trading, especially in the futures market, you want to go and familiarize yourself with each one of these instruments. Know exactly what moves that market, stuff like economic news events that might influence it. If we look at the NASDAQ and the ES for those matters, they both comprise out of different types of stocks or sectors. And different stocks like the big boys like Netflix, Google, just to name a few. On the NASDAQ side of things, which is mostly comprised out of tech-heavy stocks and other stocks, when those earning reports come out, they can mostly affect the price of the NASDAQs rather than the ES, for example. All right, so the NASDAQ, like I mentioned, trades on the NASDAQ exchange, mostly tech-heavy stocks and other stocks, while the ES, top 500 biggest companies in the US. All right, so the good thing that I always tell new traders is to go and head on over to the cmegroup.com's website, and this is where you can go and find out all of the information that you would need before you even start trading these markets. So once you're on that page, just head on over here to markets, and since we're all talking about the E-mini S&P and NASDAQ, let's first have a look at the E-mini S&P 500. Let's give that a second to load. And there's a lot of information over here, but I want to focus here on the actual specs. Right, so this is very important to know, especially from a risk perspective, what the specifications are for these contracts on both the E-mini and the NASDAQ. Right, so the first table over here refers to the contract unit. And on the S&P 500 index or the E-mini, each unit is worth $50. Now, if I have to quickly go over here to the ES, what that means, if let's say I blow up this chart over here, for every dollar movement, I'm just going to get out my ruler here, let's say from 4917 to 4918 has 4 ticks, right? And we refer to quarters in these indices, so 0.25, 0.5, 0.75, and then a full unit. So each dollar move comprises out of 4 ticks, and it's priced in quarters. Now here it mentions that each unit is worth $50, and all that really means is for the ES, if you divide 50 by the 4 ticks that's involved in 1 unit, that means for each tick that the ES moves, it's worth $12.5. Very important to understand, especially from a risk perspective, what that tick value is per point as well as per tick. All right, so $12.50 per quarter is what the ES moves per tick. All right, now on the NASDAQ side of things, let's quickly go back to the NASDAQ. Oops. Just give me 1 second. Let's go to markets again, and we look at the NASDAQ. Give it a sec to load. Go over the specs here, and you see for the NASDAQ, although it also moves in quarter points per unit, 1 unit is $20, right? So let's quickly have a look at that. So if, for example, the NASDAQ moves, now I really have to blow up this chart to see that, from 7510 to 17511, sorry, again also 4 ticks, so 0.25, half, 0.75, and then a full unit. 4 ticks involved there, and again, one contract unit is $20. So from 17510 to 17511, it is worth $20. Now if we go and divide that by the quarters, 4 quarters in a unit, that's $5 per tick that the NASDAQ moves. All right, now that was just visually to show you that on a chart. It's also given for you that information here if you scroll down to the tick sizes here, and here it mentions for every quarter index point it is worth $5 for the NASDAQ, and on the E-mini S&P it is $12.50, like I just showed you. And then you also have all of the trading hours here that these indices trade in. All right. Now, apart from that, like I mentioned, you might have very important economical news events that will in most cases affect both markets, stuff like your interest rates, job numbers, just to mention a few, will most likely affect the price movement and volatility of both the NASDAQ and the ES at the same time. While individually, for example, you might have earnings report season coming out where tech-heavy stock releases its earnings report, whether it's good or bad, that would potentially influence the NASDAQ more than it would the ES and vice versa. Now, the other major thing here is obviously the amount of risk that is carried per trade. Now, although it might sound that the NASDAQ, for example, only moves at $5 per tick, whereas the ES moves $12.50 per tick or per quarter, it might sound that it is going to be more expensive, or let's say more, how can I say, risky to trade the ES, when in fact that is not actually the case. And to illustrate what I mean by that is, let's for example look at this drop in the candle that occurred at the same time on both the ES and the NASDAQ. Now, if I have to go and get my ruler out here, and just let's go measure the high of that red candle. I'm just using this candle as an example. To the low of that candle, it had a range of about 355 ticks. Now let's go do the same on the ES. Same time, same candle, well, not a different candle, different market, but same decline, and we have 74 ticks on the ES. Now let's go and get my calculator out, and this is just taken on a 60-minute time frame. For both markets, you can use any time frame you want to. Go test this yourself. But we know on the NASDAQ it moves $5 a tick. Now here it measured that candle to be a range of 355 ticks. 355 times $5 is $1,775 movement. All right, just quickly want to punch that into the chart there so you can see it. So per contract, it moved $1,775 in value to the downside. Right. 74 ticks, on the other hand, on the ES, 74 times 12.5. That's a 925. Let's put that in quickly. 925. So we can see that the actual dollar value, if you were to talk about risk, which is very important here for a trader, if you shorted one contract from that high, and you, let's say you got out low on the NASDAQ, you would have made $1,775 or lost $1,775 if you're on the wrong side of the directional move. Whereas on the ES, you also have a candle moving down, but it was only 74 ticks. And for dollar value, or sorry, tick value of $12.50, it would only be $925. The NASDAQ can move extremely fast as well. So although it might seem that it's only $5 per tick, or it is actually $5 per tick, and might seem that it's not as risky, you really need to take into account that it can move fast with long range candles very quickly. So it could potentially, although it's the same drop, be a higher dollar value than actually the ES is. The other thing is that although these indices, some instances, for example, might have a little bit of a different sort of price action or price structure. Let's, for example, say from this high to where price is currently trading. If you look at the NASDAQ, this is the NASDAQ, and look at the ES on this side, you see the price structure is a little bit different. The NASDAQ here has actually moved lower, moved higher, created a lower high, and then moved lower again. Okay, whereas on the ES, price moved down, moved higher, similar to around the same time that price actually reversed on the ES and in the NASDAQ, it started running sideways. So price action is a little bit different as well. So again, it might be news that's coming out before market, could be earnings season. It might have a different type of price structure at any given time. But if you look historically at both the ES and the NASDAQ, then they tend to have the same price structure overall. Right? And you have days where they tend to have exactly the same reversal times. Not always, it's not perfect, but they do follow each other in direction, but I would say 90-95% of the time. There might be instances where price structure a little bit different for a time period, but let's say the NASDAQ starts tanking down here, then it's likely that the ES would follow as well. So these are the key differences between the NASDAQ and the ES. They comprise out of different stocks, different sectors, and they have different tick values. Again, if you want to go find out anything about the ES or the NASDAQ, head on over to the CMEgroup.com's website. You can go through all of these different tabs, margins that are required to trade these markets, and especially the specs, which are very important, and try to go and understand the tick value of both of these markets, or any markets for those matters that you want to be trading, right? So that you always make sure that you understand the risk involved in trading these markets. That's very important. And then actually in the end it becomes personal preference, where you want to trade the one versus the other. Or maybe you want to be a news trader and you know that, I don't know, Netflix is reporting before market open or something like that, their earnings report, and you'll know that that might affect the price movement of the NASDAQ more than the ES. Then maybe you want to go capitalize on that if you can, to trade the NASDAQ rather than the ES. So it's a personal preference, but all I'm really trying to say is make sure that you understand the differences between these two markets, what moves them, and doing that will just give you a better all-rounded idea and feel of where these markets might be heading next. Anyway, thanks for watching. I hope that helped. Take care and goodbye.